And welcome to the ETF Edge portion of Halftime Report. I'm Bob Pisani. The landmines for investors in China keep piling up. COVID-related slowdown in retail sales, Chinese regulators clamping down on everything from internet companies to online video games. And now issues with China property giant Evergrande. What's an international investor to do? Let's talk with Arnie Nowak. He runs DWS, who runs the X-Trackers China A-Shares ETF. It tracks the 300 largest and most liquid China shares traded on the Shanghai and Shenzhen exchanges. And Dan Weiner, chairman of Advisor Investments and editor of the Independent Advisor for Vanguard Investors. Arnie, I'll start with you. How much is Evergrande a systemic risk to other real estate developers in China and to banks in China in general? How big a problem is this?
Well, thank you for having me. So speaking with our CIO in Asia, we obviously take the issue very seriously. We look at all the implications. For now, though, we do not believe that this is representative or will lead to a broader systemic crisis as such.
You don't? Okay, Dan, now you run $7 billion. You've been a very big proponent of investing in international growth sectors. What are you telling your clients? Should they be putting more money or less money into China?
What we're telling our clients is that you need to work with investment managers, portfolio managers with boots on the ground. That means using actively managed funds, not ETFs, not just focused on the entire market.
And the important thing here, Dan, is you're a big proponent of Vanguard International Growth ETF. That's an actively managed fund. Why actively managed over passive investments right now?
Yeah, it's not an ETF. International Growth is actually an actively managed open-end mutual fund. Two fantastic managers, Bailey Gifford and Schroeder out of UK. They have people on the ground. They are making choices as to which companies to buy and which to avoid. And that makes all the difference. You know, their performance against an emerging markets index or China index, whichever one you want to pick, it pretty much doubled the China index over the last 3-5 years. So I would go with the active managers.
Okay, much more on what to do with your China investments coming up on ETF Edge, 1 p.m. Eastern Time.